Hi, I'm Rich Harvey, CEO and founder of Propertybuyer. Prices correcting, interest rates rising, change of government, Ukraine war, inflation, cost of living pressures. These are all the media headlines that are making buyers sit and wait and watch on the sidelines. Some people are expecting that we're going to have a recession. Others think we might just have a soft landing. But one thing is really clear. Property sentiment moves up and down quite quickly. Property's been a wonderful hedge against inflation. How long do property market corrections normally last? When we look back over the past 40 plus years, the data shows that the number of months that it takes from peak to trough, that is to hit the bottom of the market, ranges from 1 month to 8.5 months. I believe the next 6 months will provide the most prime buying opportunities that we've seen in the last 5 years. When the property market is declining, the volume of buyers is much lower. Vendors are far more negotiable, and you can take your time looking for good opportunities. Compare this scenario to last year, when the conditions were red hot. You had up to 20 bidders at an auction and competition was just crazy. So how far will the property market correct? Should you continue to sit on the sidelines and wait? How can you get an accurate read on how the market is going to bottom out? As I've always said, trying to pick the bottom of the market is incredibly difficult. But if you've got the borrowing ability to get into the market today, then you'll be better off to move forward and buy now. If prices already dropped 10% in the area that you're searching, then it's not that difficult to negotiate a further 5% discount. The market has turned quickly in Sydney from a more balanced market to be more in favour of the buyers. What are the factors that will drive this market right now? 3 things will put a floor under the property market. Number 1 is migration. I expect to see the migration cap exceed the limit that they've got because there's a massive shortage of skilled workers. Migrants typically rent for a year or 2 before they buy, and this will put further pressure on the already stressed rental market. Secondly, property investors are coming back to the market in much bigger numbers, lured by higher yields. Property investors will be riding a strong wave of rent increases over the next few years, which will offset interest rate rises. And thirdly, construction costs are higher, which means that less properties will be constructed over the next 24 months. Buyers will be looking to buy established homes and trying to avoid renovations so they can move in without delay. Rising construction costs means the value of established property will continue to rise. It's not easy to go against the herd and take a long-term perspective, but the best buying opportunities I've had in my property buying career are during these correctional phases. And these correctional phases are usually measured in a matter of months and not years. So the window for opportunity to buy will not be open for very long. I'm Rich Harvey, thanks for watching.